Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for a pretty wild trading day. It's about 7:25. I'm late today, been buried in business, and that's all I can tell you. It is January 15th, 2025. So we started off the morning, we came in and we were all on pins and needles. What's the CPI going to show? And it did a great job. It was down in the core numbers month over month, year over year by 1/10. And the market was looking for stable. Even there was some talk maybe a little higher. That set the stock market on fire, dropped the heck out of the dollar. The dollar's here at 108.90 roughly, but it was down to 108 and a fraction, and it's come back since then. But the metal markets took off when you saw that. Bonds and notes had a heck of a rally. You were up 2 full points in the bond futures. That's a lot that the market did. And now the question is, what's next? Before I show you tomorrow's news, in other words, what's coming out, do this and think what I'm saying. You've got this great news that inflation is stalled. I didn't say it's beaten. I didn't say it's trending down. It had been going up for 4 months in CPI. This is the first point where it's starting to slip back. Don't forget that. Number two, you don't know what President-elect Trump is going to sign when he becomes president on Monday in terms of presidential orders and the impact that will have on the market one way or the other. Just don't know. So there's another unknown variable that we have to deal with. The great news is that today a peace announcement was announced, a truce for 6 weeks minimum between Hamas and Israel. Let's hope it doesn't fall apart. And let's assume during that they can keep building on it and get to the point where there is, in fact, a real truce and we can see rebuilding in the region. That means that under Biden, you've seen the war with Lebanon and Israel get to a truce point, and you've seen this now under Biden get to that in Gaza. You know, Trump will say that he did it because when he was elected, everybody knew there was that. The Biden administration has been working on this, and with the help, and that I'll give that for certain, with the help of the threat of President Trump, it was able to get over the line. How's that? Everybody gets credit, okay? I'm not a bad guy there. So when we look at the data for tomorrow, and we should, what you're going to have coming in is the Philly Fed Business Activity Index. Let's hope it's better than the New York, because that was a disaster, the Empire State today. Advanced retail sales for December. How was the Christmas sale time? Jobless claims, they're looking for an increase of 9,000 from last week. Import-export prices. This is all at 7:30. So you got a lot of data coming out right away at you at that time. Then at 9, you're going to get the National Home Builders Association Index. That comes out at 9. November business inventories, that's going to come out at 9. And then we get the natural gas storage, and I can tell you they're looking for about 260,000 billion cubic feet. I mean, we normally get about 124 billion taken out at this time of year. Now they're looking for more than double that. The weather's been terribly cold. We're freezing in the Midwest. Chicago next week. This morning it was 7 here. That's warm. We're going to be -7 without wind chills next week. Highs of 5 degrees. And it's going to last throughout the week, they say. So it's getting cold. And remember how it goes. East, from west to east. So east is going to get this. How high or low, I don't know. Not a weatherman. Not my job. One other thing that I want to tell you. The special report on the dollar. It's still on the website. It goes off tomorrow, the website. I don't know the time. You want to view it, you go to iraepstein.com. You'll see it on the top left. It's the best way to do it. There'll be a cursor up here. Not a cursor, an icon. Move your cursor there. I'm tongue-tied as I'm hurrying right now, and we'll see what happens. My wife's got a dinner party, and I'm supposed to be at it. Can you imagine the problems I have now because I'm late? You've done this. I've done this, and it's not pleasant. All right. We keep seeing rallies in the energy market ever since President Biden put those sanctions on 183 ships and sanctions on 2 of Russia's oil companies. And now with Trump coming in, sanctions supposedly are ready to be hit for Iran. So the market it's not a demand-driven market right now. It's more of a supply, worrying about where those are. You had the reports today of the IEA and OPEC come out on their forward projections. I won't review them here. My clients got them and got all the detail from me on that. When we take a look at the metals, the rally continues as the break in the dollar, lower interest rates cause the buying in those, and that doesn't surprise me at all. So let's take a look at where the S&P is. Right now, the S&P is up 2%, and halfway through the month, we have a gain. Now, you'll hear a number of people, Tom Lee from Fundstrat, others will talk about it, the January effect. And that is, if you end up the month of January with the gain, you got like high 70, 80% probability, not a guarantee, but probability that you'll have an up year. And that is the important thing. The first 5 days of the month did show gains. I explained that too. So we'll see what happens. And you came back right now from being down. And if you look at this market, it was lower up until today. I mean, if I back off this market while you're up 2%, this gain today was 1.81%. Yesterday you gained 0.13. So your 2% was made over the past 48 hours. That's the point that I'm trying to show you. You were in a loss category until then. You're still in a downtrend in terms of the swing line. You have lower highs, lower lows. The 18-day average of closes is likely where the pros hit the market today, and that's what I think happened. And if you look at the Bollinger Band, you can see when they stepped in, covered shorts, and that's why I think they're reselling up here. They could be wrong. Get over the 60, 68 and a quarter area to 60, 68.50. I think you wipe that part out. But until that occurs, I wouldn't be surprised to wake up in the morning and see the markets trying the downside. Momentum, you had been oversold. You're no longer oversold. That's why I think the pros sold into the market. When we come to the NASDAQ, still a downtrend. The market went down to the 100-day average, the lower Bollinger Band, hit it, held it, came back to the neutral territory. Tonight it's gotten out of oversold condition. I think the pros are selling the NASDAQ right now, which stops over the recent high. I don't see that in the Dow. Once the Dow cleared that high, game changed. But the Dow had not been in a trend. The Dow, I'm going to walk it back here. You had a higher high, lower low right into Tuesday. All right, so you didn't have anything. I was looking for the resistance if it rallied, and I know I said this yesterday, maybe we can get up here, but I'm looking for that to be the resistance zone. And so far, you're a little bit over it. You haven't really run away from it. I think I'm right on the money there. And the same thing in the Russell. You'd hit the Bollinger Band, ran back up, and you were not trending. So we'll see what the markets want to do. I believe the Bollinger Bands will stop the rally once you get spikes, but we'll see if I'm right or wrong. When we come to the notes, we had enough of a rally. We just squeaked out over that high, lost the bearish embedded reading, but that was the target. So I think the bonds and the notes now are going to sit pretty tight and try to digest what is the move by President-elect Trump going to be. How's that going to impact where they're at right now? That's where I think you're at. In the dollar, if you've already seen my report, you should be smiling because of what I wrote and where I thought the market could retrace to, and I'll leave it at that. Go look at the report, and this is the setup. It's coming. The trade hasn't been made. In the euro, I think you're going to run into a brick wall against this 18-day average. What's the next move? The European Central Bank probably smiled, I would, and say, the Fed made that. It doesn't look like they have to raise interest rates, which would be a real problem for them. They'll be on hold for a bit. We can cut to get our economy going, and that's what I think we're going to walk away from there. The same in the British pound. I think there's a series of rate cuts coming into the pound. They have nothing but problems. I don't know how they're going to balance that budget of theirs. It's just, to me, all still looks ugly. I see the pros probably waiting. They'd love to get into the 124 area, in my opinion, to get short. I see Bitcoin waving, just like this, up and down. And that's pretty much what it's doing. It had one break in the Jan, 4 days ago now, hit the lower Bollinger Band, and magically that was the end of the decline. Doesn't always work that way. In fact, most of the time it doesn't. Are you noticing you're about to get a bullish crossover where the 18-day average is going to cross the 200 here? Now, that's not the same as the crosses that people look at, the 18, the 50, and some of the others, and the 50, and the 100 and 200, but it is important. And as that's happening, the market's going on for new highs. You don't want to fight this. This is not hitting the band and backing away. This is now called the gorilla glue trade. And it's when you latch on to the band and you see that you've done that. And when you do it, you force the market to embed, and the embedding and all picks the market up until the red line closes back under 79. That's in my enhanced Bollinger Band course on my website. And I use this all the time. I mean, it's one of my favorite tools. You got heating oil about to get that crossover. And again, the gorilla glue trades at work with the embedded reading here. And nat gas is not in that position. Nat gas is riding the band, but it's trying to force the embedded reading. Hasn't succeeded just yet. It could. There's no break in the weather coming, and this market feeds off cold weather, and you draw more than you normally do. Up until the past 8-9 days, the weather had been more or less normal. It changed about 8-9 days ago, and the extreme cold has set in both here, went down to parts of Florida, as you know, sprung up all through the east, and there's more of it coming, a whole new wave of it. That is not something that I'm bearish on. Maybe halfway into it, but not right here. So again, I thank you for watching. I'll catch up with everybody first thing in the morning. You trade well tomorrow.